Welcome back. This is the Kelly Roach Show. I'm super excited today to have Amanda Webster with me here today, and we're going to be talking about how to get funding and grow your business. Amanda is the CEO of Fund and Grow, and she is going to help us understand how to navigate this world so that you can get that extra bit of cushion, padding, little bit of extra wiggle room for your business to help you get to the next level in 2025. So Amanda, welcome to the show.
Thank you so much for having me.
Yeah. So let's explain to everyone a little bit about Fund and Grow. Like, you want to just give like a little bit of context of what you guys do, types of businesses you work with, that kind of thing.
Absolutely. Fund and Grow has been around for like 18 years. It was built on the premise of finding ways to fund small businesses because they seem to get forgotten in so many different conversations. So the founder wanted to find a way to give them some buffer, even initial startup funding, because even if you're going into like, a startup with VC funding or whatever, you have to have a little bit of cushion to get in the front side. So we built a program that helps you build EIN business credit. So you are building credit on your EIN to be able to separate your business credit from your personal credit and open up doors of funding that most people don't even know exist. And we do an accelerated program because if you think about it, when you were 18, you had to start building your personal credit, right? It didn't happen overnight. You had to do things to build it, to earn it. It's the same way with the business credit on the EIN side. So we have to help you accelerate that to get into high level cards so that you can have that buffer to be able to fund projects. And it's all revolving, unsecured type funding. So it can be used for any business doing anything that you need that's relevant to your business.
Yeah, that is something that is definitely needed in the small business world. There's so many unexpected hurdles that come up and twists and turns where you just need that little bit of extra leverage. So let's talk about first building credit on your EIN. Let's explain to everyone what is the benefit of doing that, number one. And number two, what are the criteria for being able to get started? What do you need to have in place? Is there a certain amount of funds that you need to show? Like, let's kind of give everybody some context for that to start.
Yeah, so it's basically creating a persona credit profile, but on your business side, right? So, and this can extend to even if you're building your business in order to sell it. When you sell it, you sell all of the history that your EIN has built as well. And the main purpose of business credit, in addition to just having some credit available to spend on everyday expenses that come into the business world, is to get to the tier of non-recourse corporate lending that is on its own. And that's going to unlock millions of dollars in funding, but you can't just do that from day one. So this is kind of the gap to get you from day one to typically about 5 years in business to open up all the levels of funding. Now, there will be some in between, right? At 2 years, you can open up business lines of credit and a lot better term loans you can get on the business side. But this is going to build it. But more importantly, separate it. Because one of the things that entrepreneurs do when they start is they tend to use their own personal credit cards, personal savings, and they extend themselves on the personal side, which then makes their credit score bad, right? It goes down. The fastest way to lower your credit score is to use too much of your available credit. So if you separate that, it's no longer showing up there. It's not hurting your personal credit, and you're able to separate. And that way, if anything, if your business needs a couple extra months to pay, your personal credit isn't getting hit for that, right? So that's the nice thing of having revolving flexible debt as well. Now, because it's a brand new business most of the time we're working with, or they're within that first 2 years, you do have to leverage your personal credit. That's what the lender is going to look at to make sure that you're a good risk for them. Not going to show up there. Not going to hurt your credit, not going to do any of those things, but you don't have to wait the 2 years in business and have these revenue streams you have to prove. There's no bank statements, there's no tax returns being filed. They're just going to leverage your responsible use on your personal credit, which then makes it where you do need a 680 credit score and no major derogatories to really get into the business funding. Once your business is around and established, you'll no longer need that leveraging anymore.
Yeah. Okay. Fascinating. So let's just, I'm going to double click on that for a second. So if someone is listening and they're an early stage entrepreneur and they want to get started with this process, they have a newer business what you're saying is if they have a personal credit score of 680 and they are able to show no big red flags and derogatories, that they could get started with this right away, understanding that in the beginning, they will have to leverage their own personal credit in order to get established, and then they can get started in the process. So there isn't anything specific preventing a small business, or let's call it a new business, from getting started in this process if they have decent stuff on their personal accounts. Is that a clear? Okay, good.
Yeah.
All right, that's great. Now, let's say that someone has been in business for a while. Let's say someone's been in business 5 years, 10 years, 15 years. I know a lot of businesses that, this year may have been the first year that they ever really had to dig into personal savings. I've heard from people actually that this is the first year that they ever either, couldn't pay themselves, or they had to dig into personal funds in order to float the business. A lot of people, 2024 was a year of a lot of firsts, not in a great way for businesses as they kind of try to navigate. So talk to me a little bit about a business that has been in business for a little while, but they have never started on this EIN process. So they're still leveraging their personal credit and all of those things. What would be like, if they came to you after this podcast and they wanted to get started building credit, what would be the things that they would need to show or demonstrate or do in order to get that business going? Waitlist for the Kairos mentorship is now open. In January, for the first time in almost a year, I'm opening registration for the Kairos mentorship. This is my most sacred and intimate space in my inner circle, where every single week live, I help you to elevate your vision, to step into next level leadership, to live your faith and build your empire. If you've been looking for next level mentorship that is uncontested, peerless in the market, and you want relevant, timely, and updated strategy to not only grow your business by millions, but to live your faith and to step into next level leadership in your life, this is it. Register now, scroll down below this episode, click the link, and get on the wait list now.
So I would still suggest they get some, business credit cards and be able to establish that. And they might have those and not realize they're already building some business credit from doing that. If they're not already set up with like Dun & Bradstreet, that's another area that you can help get them running and be able to get some vendor trade lines as well. But if they've been in business long enough, I would want to look at their financials, because it might be better to get a business line of credit or a term loan, because it's really going to, the seasoning of their business is going to help get over some of those hurdles. And we have a loan department and we do that as well. And it might be a two-prong approach. So it'd more be needing to do kind of an assessment of what they have going on, because even if it's a lower year, but they can showcase deposits in their bank account and their business bank account for a 6-month period, just a kind of stable, even if it's only $20,000 a month, that can open up some funding that can easily accelerate the EIN side. So it might be get a couple credit cards here. Let's get you a personal or a business line of credit over here. And both those two things combined are going to accelerate much faster, because most people can't get that business line of credit, which is going to make that credit go a lot quicker. The way business credit works, it's still 3 bureaus, just like your personal, right? It's just a couple different. It's Experian, Equifax, and Dun & Bradstreet that determine your business credit scores. But the only thing they care about is that you have trade lines, you use them, and you pay them. That's literally the only thing that business credit cares about. So you just got to start getting lines that report and using them and paying them.
Okay, got it. No, that's a really good explanation. Now, I think a lot of people don't understand that there's like this alternate universe that bigger companies live in, where they have access to like all of this funding, all of these resources, all of this money. And that's how these businesses are able to take these big leaps, make these big investments, have time, right? Small business owners, so many of us have lived in a world where it's like we literally hunt what we eat, right? It's like we have to go earn the thing and then we can spend the thing. And there is no rope, right? So can you explain for everyone listening that maybe are not even aware of, like, you were talking about unlocking these tiers, like what could that mean for someone? Like, can you share a little bit about, like, as you go through these tiers, the types of things that you will have access to and what that could mean for your business?
Yeah. So business credit is three prongs. So your first one is your vendor trade lines. Those are direct accounts with, think of like Amazon corporate, Uline, Staples, things like that. Those you can unlock with no personal credit score needed. Those, it just takes a little longer. They're lower accounts, but they're all building the same thing. The second thing is your business credit cards. Those are going to be just regular, think of your regular credit cards you have in personal, but extending them on the business side, high levels. We have people that get, I think I just saw one today, was $180,000 Chase card. Like you can get really high levels to be able to have a safety net and be able to have that right here. Mm-hmm. But then the real thing that everybody wants is that third tier, which is the true non-recourse commercial lending. And as an example, Fund and Grow, we practice what we preach. So the building I'm sitting in, we actually got a commercial mortgage that was non-PG. The owner didn't have to sign for it. It was strictly on the EIN credit side, and it was over $1 million for that building at the time. So you're able to do millions upon millions of dollars in funding once you get your business credit score to where it needs to be, which is typically around 80. Business credit scores run from 0 to 100 on the main platforms. And so once you get to 80, it's just like having an 800 credit score, right? In your personal world, you can just leverage all of that. Now, when you get to like true, if you think of like Walmart and stuff, nobody's doing personal guarantees. Nobody's doing any of those things, but they didn't happen overnight. They're able to showcase very easily their revenue. So it is also a revenue piece. There is going to be revenue that gets reported to those bureaus. And if you ever pull like an Experian business credit report, it actually will show you what they recommend you be lent. So you can even track how much the credit bureaus are telling the lenders to lend to you in the millions of dollars. And again, this can open up all different types, right? So it's not just like your SBA loans. These are high level, term loans, business lines of credit, business credit cards that you could truly self-fund your entire business with it and be able to plan projects ahead of time so that you can know and project your ROI, but go ahead and pay for the thing, right? And have a little bit of grace to be able to pay in between. But of course, being responsible and making sure you have a plan to repay. None of it's grants. This is all money you have to pay back.
Yes. No, for sure. No, I mean, full transparency, I didn't even know about this world of business credit until like a year ago was the first time I even like heard about it. It was not even ever part of my world. It was like, I just bootstrapped all my companies from the ground up. I never thought about it. I never pursued it. But now as we're getting to the higher levels and we're thinking about things like we want to buy a headquarters and we want to do these things. And I don't want to necessarily have to put that under my personal, credit. It's a whole different game. And I think that to your point, I really recommend that people learn to build a business by bootstrapping because I think responsible money management is so important. But I think once you have established the ability to run a business responsibly, having access to being able to tap into these types of things can be life-changing because at the right moment and the right opportunity, it can be really the smartest thing you can do to leverage it. I mean, I look at myself and a lot of the reason I was able to do many of the investments that I did in my business was because I worked a full-time job while I was growing. A lot of people are in that situation. I was able to, when I needed to say, I'm going to invest 50,000, I'm going to invest 60,000. Most people are not in that situation. I was only in that situation because of that circumstance. And so I look back on those investments that I was able to make, and they were things that were able to leap me forward hugely in the business. And I think this is something that, again, if you've been able to prove to yourself that you are responsible with money, I think this is a great area to open up for yourself. If you're still working on getting your hands around it personally, I wouldn't go run yourself into debt in the business, right? But no, this is absolutely awesome. And I love that you guys specifically focus on small businesses because small business owners, it's like impossible to get money. Like unless you have someone like yourself that actually can help guide you through the process, like it's very difficult. What would you say is the average size business that you guys work with on this? Like, is it startup? Is it in 6 figures, 7 figures, 8 figures? Like, what's the sweet spot, do you think?
So it's going to be, any brand new, whether it's a tech startup or just a regular, mom and pop, business trying to start. So it's any brand new business is one of the main areas, but also high risk. So a lot of businesses might already be at $5 or $10 million, but they're high risk and they can't get anyone to lend to them. So we do consult and work with them a lot as well. We have a huge real estate investing pocket just because that is almost impossible to get any legitimate not private equity type funding. The big banks just don't like it. It's a high risk. There's still a couple industries we can't touch. Cannabis and crypto are still kind of not on the radar, for that. I think that crypto might change. We'll see if that becomes a thing. But cannabis and things like that won't be until it's federally deregulated. So, it's just one of those things that, any business that is in a high risk is going to be best. And then typically it's going to be anyone with 0 to 10 employees is going to be the main niche for us. Yeah. Because after that, hopefully they've made enough, return on what they're doing that they've kind of got everything in place. And they now probably qualify for, a business line of credit because they have the revenue to show for it.
Yeah. So if someone's listening to this podcast today, I'm sure many people are going to be listening to this podcast and saying, okay, I need to do this. First of all, what would you recommend that they start kind of cleaning up, getting together, getting organized around to get ready to have a conversation with someone like yourself in order to start this process?
I think the main thing is understanding your personal credit, because it's always going to be the first key in here. So understanding where you're sitting with it is probably the best thing to do. As long as you have either the business created or are about to create it, none of that really matters. But we also always say, call us. We offer a free consult. We want to be able to look at it and let you know ahead of time before you do too much. So if you haven't created the business yet, it might be better to talk to us first, because sometimes you might code that business a certain way that's going to put you in a high risk category. And there are other options on coding, or even the name of your entity can actually cause some problems. So sometimes it's better to have the consult first, and that's why we do it for free.
That's really interesting. Okay. Yeah, I definitely want to invite everyone to book their call with you at the end of our conversation here today. So we'll come back to that, because I think this is really important. In terms of the loan rates or the percentages that people can expect, can you give me an idea? And obviously that's fluctuating all the time and it changes constantly, but we're recording this in December of 2024. Can you give an idea of what people might expect if they're going to approach you in the near future and, maybe you're going to be getting them started with something?
Yeah. So everything we target for the first typically around 12 to 18 months is going to be 0%. That's one of the things that we like to give breathing room. So those are the types of offers, unless someone specifically wants an Amex Platinum, which doesn't have that offer, but they might want it for the benefits that come with it. So it's going to be 0%. Then it is going to be similar to your personal credit cards. It is going to be a higher interest rate, which is why it should never be for long-term debt. This should be a bridge or a ongoing revenue, reoccurring stream, for marketing purposes. So it's going to range anywhere from 9%, and I've seen it as high as 22% right now. Still might be a little lower than your personal, but again, should not be the goal shouldn't be letting debt sit on these types of accounts. And then your business loans, line of credits, those are all over the place right now. I've seen them for as low as 10% and as high as 36%, which is crazy because it's never really been that high. But I think that until we get some stabilization in the financial sector, which I'm hoping will happen by second quarter next year, those rates kind of sit. But again, it's all about cost of capital and what you need and what you want to be able to accomplish. So these should be, think of ability to have short-term, or make sure you have an offset for the cost of the capital.
Yeah, no, that makes sense. So one more question for you, Amanda. I know that for us, not in the realm of pursuing credit for ourselves, but in the realm of going through, we've attempted many times to get relationships set up with vendors that promise to provide the upfront loan so that someone can pay for a program, right? So if someone that wants to join us wants to get financing to pay for the program. So every time we get so excited, we're like, great, they're going to have longer to pay off the program. They're going to have more options and so on and so forth. We go through the process, we get all set up. And then what happens is pretty much every single person gets rejected. I think I've been in business since 2012. That's when I started my first company. I think we've had 1 or 2 people go through and get financing for a program with us. And so I guess a question that I have is what percentage of people that come to you that want to get started down this process are actually able to? Because I think it's very interesting. And again, this is probably why you guys are focused on the small business sector. Small business owners have it tough, man. they cannot get access to funding, right? And so they're putting things on their personal credit cards, and it's difficult. And our experience has not been on our side so much as on their side. But yeah, I'd be really interested, like what percentage of businesses that come to you that want to get going on this process are actually able to, not to say that you're even the one controlling it, because you have to go through, you have to go through the application process. You have to go through all of your vendors and all of your, processes that you're following. But I'm very interested to hear about that.
So this is the other reason why we have the consult, or we try to get it on the front side. But I also have a 60-day money back guarantee for people who happen to sign up online for the same thing, because then we'll do the consult right after sign up, is that we want to vet them before. So we set the expectations. We do a pre-qual, which is just a soft pull on their personal, and make sure they actually meet the criteria before we even take their money and do it. And even outside of the 60-day money back guarantee, if somebody comes to us and legitimately can't get funding, we're giving them their money back. That's if we can't provide the service, that's how we operate. So typically with anybody who has a program, a coaching, an educational, whatever it may be, we partner with them all of the time and say, well, we'll do a pre-qual beforehand so that we can make sure they actually qualify. And it also depends on the amount, right? So if they're looking for $10,000 versus $75,000, obviously that's a very, very different scale. But we're trying to get all of our clients up to $250,000 in the business credit, but it's not all in one chunk. So it's a 12-month program, because you have to build like you did when you turned 18. But we do get a good chunk in the first round. So we do 3 rounds of funding. So I think it's just expectations that we like to set in front of the conversation with the client before they even pay us. So that's why we do it that way. So as far as I would say our retention rate basically is about anywhere from 85 to 90% on any given month. And most of that 10 to 15% comes from the online signups that didn't have the consult ahead of time. So that's pretty much how we live and breathe and why we do it that way. Because I'd rather not take their money if they can't qualify.
Yeah, no, for sure. So no, this is great. I mean, I definitely, why don't you go ahead and let's share your website. Let's also share how they can book their free consultation with you. And then any other resources that you want to share just for people that are listening that want to just start learning more about like how to get started with this.
Yeah. So I set up an easy link. It's just fundandgrow.com/Kelly, just to make it super easy and simple to get your free consult, to do a free pre-qual. I also welcome everybody. Something I preach all the time. Go check our reviews. Go to Google, go to Trustpilot. So tell us, anywhere you can go to do reviews, go research, because I always say that that's what actually should tell you if you want to be a customer is what do my customers say about us. We have an amazing rating. We've spent many years building that up with our clientele. And I always want people to know what they're getting into, but then book the free call. Have the conversation. And even if you don't qualify today, the consultant's going to tell you what you need to do to qualify and when to call us back. And that's a free service for many reasons, but mostly just because we're here to help business owners. And when you look into us, you're going to find that we're one of the only flat fee models out there, because we're not going to benefit on whether you have great credit or regular credit. We want to be able to provide the same quality service no matter what to all of the business owners.
Great. Okay. So if you're listening to the show today and you want to give yourself a little bit more cushion, a little bit more wiggle room, and not only that, you just want to get this off your personal credit and start building business credit, definitely take advantage of the free consultation. It's a great way to look at just positioning your business for the future and being prepared for the unexpected, right? So encourage everyone to take that step. Amanda, from your side, anything else that you want to share with our listeners today, just in terms of thinking about their business, their credit, how they're positioning their businesses for the future as it relates to this space?
I always just say it's really healthy from both a tax, CPA, and funding perspective to divorce yourself when you get into business. And if you have multiple businesses, divorcing each of them and having everybody stand alone on their own legs is the healthiest way to do things. Your accountant's going to love you for it. The IRS makes it super clean when you do it that way. So it's the same way with funding. If you can just make it clean and divorce yourself from everything and have your personal on your personal and your business on your business, it's going to make it clean and easy. And in the future, if you ever do want to sell your business, it's also the best way to have all of that documented, that you never commingled anything.
Perfect. I love it. Well, Amanda, thank you so much for everything that you shared here today. For all of my listeners, definitely go ahead and book a free consultation. You have nothing to lose. And let's get our businesses set up for long-term success. Thanks, Amanda.
Thank you.